Bringing Scott Bauer to get his take on the data, market reaction to CEO of Prosper Trading Academy. Scott, we do appreciate you sharing this Friday morning with us. A busy one for you, I'm sure, so your time's appreciated. Non-farm payrolls well below analyst expectations.
Ben, how many times have we talked about over the last several weeks and even months that we've got to be very cautious of what we wish for, right? The slowdown in the economy, whether it's from the job side, from the eco data, whatever it is. And this is case in point of what we have been talking about. Now, the Fed is really boxed into a corner. We're getting all of the weaker data. We're getting slowing job growth. We're getting a slowing labor market. But now all of a sudden, the market is looking at this as not that that's a good thing in terms of the Fed, lowering rates, but that it's, oh no, maybe recession is back on the table. Maybe things are much worse than expected. You and I have talked about this numerous times. I'm not excited to say this is playing out. I'm really not, but it is playing out right now.
Okay, well, you can understand those concerns, right? I'm looking here. Last time we were above 4.3% was 4.6 back in November of 2021. I mean, that was quite the spike to see the unemployment rate up 0.2 higher than what analysts were looking for. They were anticipating 4.1. Again, that number significantly above expectations as well, raising concerns, right? It's not just this tech sell-off at this point. Now it's, is the Fed behind?
Oh, they absolutely are. And again, not to be the Monday morning quarterback, not to be looking over our, hindsight.
Or to cheer it on. We hear you, right? You're not cheering this on by any means. Exactly.
But, we said right here, I said right here, I thought the Fed should have cut in July.
I remember
that everything they look at is in the rearview mirror. And they weren't being proactive, weren't looking forward. And now, at least temporarily, and I'm not trying to be Pollyanna here at all, whatever, but at least temporarily, the market is looking at this and saying, uh-oh, we may have a problem on our hands.
Scott, does this put 50 on the table for September?
I don't think so, only because you've got the political side of things there. That 50 could really, really rock the boat. 25 is a given. There's no question about it. What it does do, though, is also accelerate the possibilities for a November and a December cut, which were already both priced in greater than 50%.
Scott, I'm just taking a look at the S&Ps in reaction to below 5,400, convincingly below. We basically gave 40 points back on this number. Still holding up above the June lows, though. The NASDAQ convincingly below. I mean, no surprise to see stocks selling off on this.
No, not at all. And you know what, Ben, with the exception of gold, and I haven't seen everything right now, with the exception of gold, you're seeing sell-offs across the board.
Yeah, new all-time highs for gold.
This is more a panic sell-off, if you will, in my opinion, where you're seeing every asset class being sold, with the exception, obviously, of fixed income, where we're seeing those bid up and rates coming down right now. So, is this something that we look at and say, all right, step back, take a deep breath. You said we're holding those lows that we saw back, below 5,400, at least at this point right here. I don't think things are in an awful situation, but I do think that the writing was on the wall for this, and the Fed could have been more proactive. So let's see if these levels can hold from those lows that you had just talked about. But you know what? I think we actually could see this as somewhat of an opportunity here, Ben, especially given with the rates coming down. And I know that markets are getting hit right now because people are panicked and it's a risk-off sentiment. But what happens when rates come down? If the economy is still hanging in there, even though the numbers are light, but the economy is still hanging in there, these small caps are going to do okay. And I actually think that some of these big mega caps that have just gotten obliterated over the last week or two, there could be an opportunity there.
Yeah, well, we started off the show talking about Intel, talk about mega caps, large cap stocks coming off. Let's talk about this chart here. We just pulled it up because you mentioned the word panic, Scott. So I pulled up the VIX futures. Look at this, just off that 20 handle right now, 1955. We're talking, up a double digits percentage-wise here, Scott.
Absolutely, but if you look at the entire VIX futures curve, if we go out a few months from now, we're inverted in the VIX curve, meaning that panic, that huge spike we're seeing in the VIX is for the current VIX future, not what we're seeing out in September, October, November. Those are up as well, but not as much as right now. So we're in this state of backwardation, if you will, in the VIX here, which tells me that may not last very long. And again, that could lead to a little bit of an opportunity here.
Scott, I also feel like not only is it the economy and concerns associated with these numbers as of recent, but you mentioned again gold, right? We've seen the yen now, and even treasuries are kind of taking on that old sort of safe haven, kind of flight to quality type trade, something we haven't seen in like 5 years, I feel like.
You're right. When is the last time you saw the 10-year move as violently as it has? And I'm not even just talking about on this report this morning, seeing it down, 15 basis points or so?
12 right now,
Okay. So yes, the violent moves that we're seeing, especially in the fixed income market here, is so representative of a market that is very panicked and quite possibly could be a little bit oversold at this point.
Yeah, you could say that again, and nobody would dispute it, that's for sure. Scott Bauer, we appreciate your thoughts here and your time this Friday morning to help us take a look at the number market reaction to Scott, CEO of Prosper Trading Academy.